Hello and welcome to today's packed video, which is called S&P 500 going from squeeze to an oversold bounce. Let's see about the mileage. You know pretty well what I do on my site and everything new that had been happening on the weekend as per the announcement. And let's dive right into my tweet before the closing bell. The sectoral view had been reasonably risk-off, and while I had called for an upswing to develop, it had reached very far. I would say a bit suspiciously too far, given how much the risk-off view, sectoral view, had been ruling throughout the day. This is a progress chart. You can see that tech and discretionaries had been really nowhere, and it had been up to, of course, financials doing great. Otherwise, the risk of defensive sectors had been performing fine throughout the day. Full details about what I expect as regards the S&P 500 move this week, preparing you for upcoming job market data. Tomorrow we have the Liberation Day as well. Review the extensive Saturday's video, and thanks once again for the great reception and all the likes and comments that you are giving me on this channel. This is the closing picture daily chart. Percentages of stocks trading above various periods of moving averages. 200-day still well below 50, so nothing to cheer. Same for 50-day. Of course, when these flip, if these flip, should these flip, the picture would dramatically change, but we are nowhere there. And the short periods here shown by the 20-day moving average, that percentage of stocks is only a little above 50. It did not spike reasonably too high, too fast, which means that the rally could, based on this metric alone, go on for a little longer. However, this is once again the sectoral view following the closing bell. And you can see that tech basically closed neutral, discretionaries did not take off, and only those who had been leading before, financials and defensives, had been doing fine. Industrials, communications, nothing to cheer, but not dragging their feet either. So this is slightly more than glass half full rather than glass half empty. However, and this is mirror opposite of what I have just said, and this counts more to me, is the bond market perspective, where review once again Saturday's video, the chapter, at least the chapter that I call bonds, and there you can see the dramatic turn on Friday and how it is being meekly retraced today. I would not speak about a distinct risk on turn unless a certain dollar amount for junk corporate bonds is overcome to the upside. I have shared that already with clients, and I will be commenting upon it as time progresses, but I'm leaving it as premium information for them. So this is just dialing back any bullish enthusiasm. What started as a short squeeze turned over into an oversold bounce, which is, however, sputtering on a pre-market basis, because thus far yesterday's highs, intraday highs, are being respected in S&P 500, and Nasdaq bout of pre-market outperformance of S&P 500, not shown on this chart because this is a gold chart, had been dialed back. So I'm having question marks, serious question marks, over whether S&P 500 can really make it even as far as the elections level, meaning prior week's top, whether that roughly 200-day moving average as it stood some 4 trading days ago, whether that level can be reached in S&P 500. You can chart it for yourself. I will be providing extensive charts to clients as always, but right now, let's dive into the bright spots. Clients have been benefiting on my continued bullish call for gold and for silver not to tank, to consolidate and to build base for another push higher. Clients of also, trading signals clients, have also got the bullish turn in oil. I have cautioned them about oil sellers being done for now late Sunday, and it has to do with Mideast. I had been talking this subject at the end of yesterday's video, to which I will be linking as well. Thank you for liking this one and subscribing to the channel. My joint page will help you select what's right for you based on what and how you trade. Combine the daily analytics with intraday coverage, and forget not that each package practically has its own premium diagram channel. Combine that with the lively stock market one being done with Helene as per the announcement on Sunday. Review that as well. My journey, obligatory disclaimer, and let's talk soon again.